Welcome back, everyone. I hope you're all doing fine and well today, and happy Monday. So before we actually jump to the technical part of today's session, these are how this video are going to look like. So first off, we're going to briefly discuss my open positions, which are part of the trade recommendation that I shared with you last week. And then we're going to talk about my this week trade recommendation. I'm talking about the trade that you can pick that you can look into for this week in general. And after that, we're going to take a look at the fundamentals. Okay, those are the three parts. Well, you know how we always do. We always come up with the fundamental first off. Then we talk about my open positions. Then we're going to discuss my trade recommendation. And after that, guys, all my trade recommendation, most of them are actually doing very well right now. The one I see open. And I can tell you that some people actually chatted me up and they all want to be in my mentorship group. So if you're still interested to join my mentorship group, or you just want to see how I trade, I have a free Telegram channel that you can I share a couple of my trade setup, couple of my, one or two things that I do to make one or two very good trades in the market. Okay, I put it on the Telegram channel, which is very free for everybody. But if you want a more secluded, a more exclusive kind of package, you want to join my mentorship group where I share signals, I share every single thing I do in the market, you can always check the link in my bio. You can send me a DM or just email me. Everything is in my bio anyways at the top. So without further ado, guys, let's jump straight into this video properly. First off, we have the Japanese economic heat map right here. But before we talk about the heat maps, guys, let's take a look at what the hedge finder is recommending for us as the top setup today. You can see right here we have gold still very bullish with a score of 9, and we have pound Aussie, we have CAD CHF, we have pound yen, CAD yen, and then we have both Nasdaq and S&P 500. I am not super interested in any of this for now because gold is way too high to buy right now. Nasdaq is way too low to buy right now. Pound Aussie is still moving around a particular level, also kind of like very high to buy. CAD CHF is too low to buy. Pound CHF is too low to sell. As a matter of fact, that's not too low or too high. But both pound yen and CAD yen, I'm not interested in buying them right now. Definitely not. S&P 500 are also not. It's also very low to buy right now. I'm definitely not going to buy right now, considering last week very crazy bearish. That's crazy sell off that happened all across board when it comes to the US stock indices, okay, or stock indices. It's not good to buy right now. I'm not going to suggest it. I'm not even going to advise it to my enemy. But when you come to the shorting part, we have Aussie CAD, which is also very, very, very interesting, but too low to sell. At least I want to pull back before I can start selling Aussie CAD. But AUDJPY looks very good. USD CAD looks very good, and I'm not considering NZD CAD anyways. But USD CAD and AUDJPY are one of my trade recommendations. As a matter of fact, I have a trade currently running on AUDJPY, which is also part of my trade recommendation for last week. So let's quickly take a look at that. Before that, let's talk about the yen economic heat map. We're going to talk about the dollar economic heat map and maybe Aussie economic heat map, and then we're done. Okay. So first off, let's take a look at the yen. You can see right here on the Japanese yen economic heat map, when we compare the forecast with the previous and the whole shebang. Okay, you can see what we have right here. Oh, all right, good. Thank you. All right, I was scared a little bit. So first up, we have 0.7% GDP growth in March. Okay, that was forecasted, but we got 0.6%. But if you take a look at what we had previously, the quarterly GDP in Japan, you will see that we have 0.3. So in my personal opinion, when you compare the previous with actual, we had a booming economy in Japan. So take that for one. Second thing is manufacturing PMI, which actually was very short across board from the previous to the forecast and then to what? The actual. That was not very good. So we're going to give that a negative, okay? We're going to give the GDP a bit of a positive right there. You look at the service PMI, all of this data was released in March, except the manufacturing PMI, which came out in February. Okay, so March 1st, we had service PMI in Japan also came quite solid, okay, from 4.94 to 53.3, which 53.9, which was really good. So we're going to give that another plus, okay, right there. The retail sales also came quite just as expected. However, when you compare it with previous, you see that it came up by 0.2%, or so to speak. That is very good for retail sales year on year, which is, we're going to give it another plus. If you take a look at the CPI, you see that previous was 4.0, and we have a sticky, which is still 3.7. Consider the fact that, Bank of Japan is planning to hike rate, and inflation is expected to go up if you're going to hike rate. If you're having a lower inflation and you're planning to hike rate, that is not ideal. So if you have a higher inflation, then you can look into hiking your rate, and that is exactly what the Bank of Japan really wanted. And that's why we have the CPI year-on-year and PPI year-on-year seems to be pretty strong right now and quite sticky. So I would say I'm going to give them a little bit of a plus on that one because that's exactly what they expected. considering the plan for the year to hike rates at least twice, okay, maybe with 0.5% or so. But we shall see how it eventually goes. Okay, so household spending also got reduced, which is not quite bad. Okay, meaning people are not spending as much as they used to. In considering that also kind of factor into the household inflation. Okay, the job data as well. They are not dipping into their retirement. They're not dipping into their savings. They can easily spend money if they have enough to flow around. So we can actually give them a plus of that one as well. Considering what is also recommended right here, the surprise, which is very good. Okay, and the unemployment rate kind of came higher than expected, which is not good, from 2.4% forecast, which is also previous, and it became 2.5%. That is not super good. So we're going to give them a dash for that one. And lastly, we have the employed person and the retail sales year on year. Retail sales year on year came quite good, okay, in my opinion. When you compare it with previous, it came 3.9. However, the forecast is exactly 3.9, so that is a little bit in the middle. But I'm going to give them a plus for that as well. So the employed people also got increased by 50K in January, which was really good. So overall, I'm going to give them 75% strength, okay? And that is that. Okay, that's me being very generous, okay? And that's really good. And you can see since Friday, we've seen Japanese yen index. Where is it right now? So if you look at the Japanese yen index on the daily band, okay, you will see that actually has been, it's been taking a whole different turn gradually. And that's really good. Okay, that's very good for the currency. Because as for me, I'm still quite bearish on Aussie yen, Kiwi yen, and the rest. Okay, and that's what happened on Friday. We had this very interesting bullish candle, and this is what we have today on Monday. Okay, I decided to just stay a little bit to record this a bit later on Monday, so I can get the full picture of what the week is going to look like. And right now, it seems like this pullback to retest this particular structure right on Japanese yen index, it's finally over. So maybe we're going to get a more bullish momentum moving forward on Japanese yen, but that is still very much subjective and objective. So I'm not sure how it's going to go, but overall, it looks very decent, and I would like to see how that goes in general. So let's take a look at the US economic heatmap. Considering what the time looks like right now, I'm not sure if we're going to be able to talk about the Aussie economic heatmap, but we shall see. So the US economic heatmap right now, it seems to be, it seems low. All right, I think it's back now. So the US economic heatmap, everything looks pretty decent, okay? Although we are all expecting, considering the fact that because of the tariffs, okay, because of the manufacturing PMI that is also, the service PMI that is expected to drop below point today. This week, if we look at the economic heatmap right here, the economic calendar right here, we have the manufacturing PMI in the United States, which is expected to drop from 50.3 to 49.6. So if that eventually happens, that might be the beginning of the bearish momentum in the United States, okay? But right now, based on what we have right here, I'll say we have averagely 50% strength in the United States. When you compare the forecast, the previous, and the actual together, they all look pretty decent together. So you see, we have a more higher quarterly GDP growth that was released March 25th, 27th, excuse me. And we have the March 17th, we have manufacturing PMI, which another one is coming today. On Tuesday, tomorrow, which we have from 5.6, from 50.6, we drop all the way to 50.3, okay, which is not very good. So we're going to give this a plus, we're going to give this a minus. All right, service PMI came pretty good, that's good. Retail sales in March 17th, it came out quite lower than expected. That is not good at all. Okay, CPI year on year also came, inflation in the United States is still pretty sticky. Okay, both CPI, PPI, and PCE, they all came quite sticky. You can see they are all literally not changing from what has been forecasted. And you compare them with the previous, they all kind of looks like it's cooling down gradually. Okay, but it is not there just yet. So I'm going to give them average, okay, just an average. Well, I'm just going to give them average. Then when we are back down, like I said, it's 50%. All right. So the wage growth is still very solid. Unemployment rate is still 4.1, which is still pretty good. Initial jobless claim also came very smaller compared to what has been forecasted, which is still very good. Just job opening, we have more job open. That's good. ADP came quite on cool for the United States last month, which is March 5th. Okay, and last month, which is February, but it came out March 5th. We have another one coming out this week as well. Non-farm payroll also came quite lower than expected, which is not very super. And we have the housing price index, which roughly right here is indicated to be very good. So when you look at this, we have no, we have average, we have no, and then we have plus. So like I said, it's 50% strength and 50% weakness. So I would say I'm neutral on USD right now. And you can see that's the reason why I'm more interested in the Aussie pair, in the Swiss pair, and in the yen pair. I'm not leaning toward the dollar pair because right now, based on the economic factor, I'm not super comfortable picking a trade on dollar right now. But as time goes on, possibly this week, when some economic in there, when some data comes in and we actually get another shot at the economy in the United States, maybe the road or the path will be clear and we can get into some very fine trade. But for now, I'm still holding off on the yen pace totally. So taking a look at the AU economic heat map. So before we actually talk about AU economic heat map, let's take a look at the DXY. I want to mix it together so it doesn't actually get too much separated. So looking at dollar index right now, I'm still hell-bent on waiting for this pullback. Okay, the pullback is done. Okay, we have this particular break of this intraday, or let me just say 1 week range. The market break above it, pullback. Now the plan is to see if it's going to continue towards the upside to return the 50% Fibonacci. If that happens, fine. If not, I guess we're going to have to see dollar index actually just drop without a proper pullback. And not just 50%. It hasn't even come all the way back to 38.2 Fibonacci, which is the bare minimum that I consider. Okay, so right now, considering the economy that looks like 50-50 to me, and considering the DXY, considering the chart that looks quite uncool, that's why I'm staying away from dollar index right now. I hope you all understand what I'm trying to do right here. Okay, now taking a look at Australia, you can see they look really cool, right? Everything looks super sweet right here. The GDP seems to be booming gradually. I know. This was released, everything right here was released in March, aside this inflationary data and the employment data that was in February. Inflationary data was released in January. The rest were released this month. So that was very good. So now, looking forward, the GDP growth looks pretty good. Okay, it's booming gradually, which is very good. We have the manufacturing PMI also looks really decent. Okay, we have a robust manufacturing and service PMI, they are above 50. And then we have retail sales at 0.3, which is a very big jump considering where it was coming from the previous rate of 0.1. That's cool. Inflation is pretty sticky in Australia as well, so we're going to leave it at that average. Okay, but we have a very strong data from the service, from the manufacturing and service sector to the GDP quarterly, to the GDP growth, to the quarterly GDP growth, excuse me, and then to unemployment rate, we still remain at 4.1, still very sticky, still very neat. Okay, 4.1 is cool, the same thing we had in the United States, anyways. And then the unemployment change is the only one that was not very good. Okay, the employment change is the only one that's not good. The unemployment rate looks really good. So I'm just going to give Aussie around 65 to 70% strength right now. Okay, so that is very good considering. But when you now look at this and you look at the Aussie yen, which is still bearish, okay, that is telling you that something is changing. Okay, because I actually tapped out of this trade very early on Friday, which is insane. Okay, it's actually it's an obscene kind of thing for me to do, but I did it. And considering what we have on the economy, which looks very superb and bullish, we have the opposite on the chart. Maybe don't forget when I was talking about the economy the other time. Right here we have AU and JPY. Okay, AU right now looks very decent to the upside. I said 65%. Well, we have Japanese yen with a very, very much bigger economy. Okay, which is around 75% when it comes to the economy itself. But when you now look at their trade relationship, when you look at the Australian currency, and the Australian dollar, when you compare it with oil, when you compare it with copper, when you compare it with gold, and there's a lot of pressure that comes to Australia. And then when you look at their biggest trade partner, which is China, you know that we can see all this printing on the wall. Okay, and yes, today we had Chinese yuan manufacturing PMI, which seems to remain quite just as expected. Okay, it seems to remain just quite as expected. You can see the Chinese yuan manufacturing PMI and the non-manufacturing PMI, which can also be considered as service PMI, they all both came quite decent. All right, and the last time when we had some very interesting data on Australia, okay, we noticed that there was some data that was released last month. Okay, this month, excuse me. Even though today is the 31st, but we still this month. GDP looks really good, and we've seen that already. We also have the what's it called again? Give me a minute, guys. It's coming up. All right. Okay, nothing on that one. So let's take a look at it. The third week of March. We have unemployment rate, which is not good. The employment rate is not good. Unemployment rate looks really the same. And yes, the last week. And then the CPI year on year came quite weak. Okay, came quite weak. Possibly this is the reason why we're getting all this bearish reading on Australia. But so far so good. Japanese yen is still pretty strong in my personal opinion. And this is going to be the first trade recommendation for me. Let's start with Australian dollar, Japanese yen. And don't forget, guys, if you want to join me with all these trades, okay, you want to join me while I open this trade, where I put my stop loss, where I put my take profit, if at all I say take profit, and how I manage the trade in total, okay, you can always join my free Telegram channel, okay, or if you want a more exclusive package, you want a more exclusive page, you can always contact me via my email or come to my DM and I could be added to my mentorship group with a very small token. And that's that. All right. So let's jump straight into my open position. So Aussie yen is the first one you can see right here. Like I said, I'm still looking forward to add on to this trade. Possibly if I can get a pullback in the next couple of days. But if not, this trade looks like a very nice and decent one that seems to be going down gradually. The next trade I'm holding is silver. Silver seems to be pulling back right now very heavily. Okay. However, my trailing stop is still below here. So if you get a close below this region right here, I will get tapped out. I've already made some very interesting profit from this trade, so I'm already good, and I'm just trading very tightly right now. I've already made close to 1:2.5 from this trade already. Genuinely, I was risking just $45, and right now you can see I'm making I'm $125 to $130. It's not stable. So overall, I've made some very interesting profit on this particular trade, plus and minus the swap charges. So on silver, I'm still quite decent on it. I'm still holding to see how it goes in general. Australian dollar, Kiwi, it's another trade I took on, last week, one of my trade recommendation as well. It's still very young. Okay, this one has been very dramatic. Okay, but let's see how this goes. Okay, you can see the market actually went all the way back to the upside this morning. Let's see if it's going to come all the way back down moving forward. But if not, that will be that. Anyways, but I'm still holding this trade for now. Let's see how that goes. And the next trade I'm holding is AUDJPY, which is the last one. And that is AUDJPY. I'm shorting AUDJPY. There's also another trade that is being recommended on EdgeFinder right here. As you can see, AUDJPY is rating -7. I also share this on my mentorship group as well. I'm not sure I shared it on the free Telegram channel, but I'm definitely sure I shared the silver trade on the free Telegram channel. All right. So this one looks pretty decent. The moment I see 1% profit on this one, I'm risking 70 pips on this. So the trade is currently running on like maybe 60 to 50 pips, so to speak. So if I get 70, if it comes below here and I get 70 pips, I will start trading this one quite neatly as well. So that is that on all my open position. I'm going to attach a picture to the website just to show you how they're all doing. Now, let's come to my top trade setup. Okay, my trade recommendations. So first trade I'm going to be recommending for you today will be euro dollar. Don't forget I've been looking forward to short euro dollar for the longest period of time. And you can see, even though I hate when people put this, like you should buy, you should sell, but I'm not looking to buy euro dollar right now. But for analysis purposes, I would say it's possible we see euro dollar actually move to the upside right here. And why is that? Because we can see the momentum that is forming up nicely right here. So if it cross and over and pull back, I would say they might consider this. But considering what is going on the dollar index right now, I would say that you have to be careful buying. But if I personally get a close of candle below here, okay, I'm not in the trade just yet. Okay, if I get a close of candle below here, I would short euro dollar and see if I can get it all the way back to where I was targeting earlier, which is at 1.06384. Okay, if I can get that candle that close below this particular region, this particular low, I'm going to short euro USD. But for now, I'm still holding off and just watching very closely. The next trade is pound USD. You can guess what I'm about to say as well. I'm still looking forward to short pound USD as well. Don't forget, we saw a very nice and decent divergence at the top here. Okay, a very nice and decent divergence right here. And you can see what is happening on the RSI indicator. So considering how it's all playing out, okay, I'm still bent on seeing the market crossing below here. You can see lower low, lower high before we get this massive touch to the upside. And don't forget, we had some very interesting data that came out last week for the United Kingdom, which I would like to share real quickly if time will permit me. So this is the United Kingdom economic heatmap. I'm just going to look at the data that came out last week, which should be around March 26th. Exactly, the CPI data came quite cooler than expected. Okay, we are expecting 2.9. It came by 2.8, and you can see what happened. I was expecting GU to actually fly to the upside, but it was just a measly 20 pips move to the upside, and then it came all the way back down later. So that is telling us that something is not cooking really well. Okay, something is not cooking really well. And if you take a look at all these fundamentals right here, we have a very bad monthly GDP growth. Another one is coming this week. We're going to have to see how that goes. The manufacturing PMI is terrible, 44.6. The service PMI looks pretty robust anyway. The retail sales looks good. Inflation, CPI year on year looks pretty decent. But the PPI was not interesting. This is more like, this is crossing towards deflation. And unemployment rate is still pretty high. 4.4 is pretty high. I need 4.0 or maximum 4.1. Okay, that's fair enough. But 4.4 is more like a junior brother to 5%. Okay, unemployment rate, which is not very good. And we look at the employment change, you can see that we have just 5K increase from the last data, from the previous, which is 38K. We have 56K additional employed people, which is measly fair. But looking at this unemployment rate and the employment change, I'm not sure this actually tally with each other. So I'm still around, let's say, 45 to 55% strength in confidence in the United Kingdom economy. So I'm going to just give them, I would say neutral, bullish neutral. Okay, bullish neutral. All right. But while I'm giving them bullish neutral, I need a nice and decent pullback on pound dollar. Okay, it is just expected. I'm not asking for too much, right, guys? I'm not asking for too much. So if I get a break below here, I will take the shot definitely. But if not, and the market decides to push up right here, I will just watch it and take my counter trend later. I will postpone my counter trend trade up until later, and that is how I'm planning to take this pound dollar. Okay, EURUSD is another fine one that I'm looking forward to buy in the next couple of hours if the market is going to break above this region. When I got up this morning, I saw the market around here. I was thinking, should I buy? Should I buy? I was like, let me just hold off on it for a minute because number one, it's not recommended on the hedge fund at top setup. Okay, EURUSD is not right here. And if you look at it on, I'm going to share that later, okay, if I can get it anyways. But if you take a look at it, if you look at the economy in general, if you look at the currency attributes in general on hedge fund, I guess we're going to have to see some very interesting data as to why it's not reading maybe positive 7 or so. But as far as I'm concerned, for now, I would say EURUSD looks, on the technical perspective, EURUSD looks pretty decent, like something I would love to buy, considering after this crazy pump to the upside, it's one of the first currency that I've actually done a very decent pullback to 50% Fibonacci, which is my first considerable entry for a buy trade. Okay, so let me take a look at the EURUSD and I will share down with you and I will look at that. Yes, EURUSD is reading -3, which is actually very strange. Okay, taking a look at it right here, you can see it's reading -3, which is very strange. That means possibly because of you can see, okay, the COT data. Actually, no, COT data, the COT long, the net long is still favoring euro over CHF. As you can see, we have 9.09 CHF net long and 90% net short, just 39.57% net long and net short for euro, which is still like the plus. And that one, the retail sentiment is also kind of like very good. You can see we have 29% short and 71% long, which is very good as well. So I'm going to give that also a very good one, but it's really negative one, which I don't really understand why that is happening. All right, but when you look at the economic growth data, we have the GDP score +1, the manufacturing and service PMI. The manufacturing PMI scores -1, -2, which I think the euro manufacturing PMI looks okay. Maybe it looks quite not cool, but the service PMI is actually probably the same thing. The risk 0 is right here anyway. The retail number also looks 0. Everything looks flat for the service PMI and the manufacturing PMI. And CPI in Europe and in Switzerland, CPI in Switzerland is actually pretty much flat. It's 0.3%, 0.2%. And in Europe, it's quite decent. Okay, 2.3%. It's not too hot, it's not too cold. So I'm saying it's easily in the middle. Okay, don't forget, I don't just trade technicals. Okay, I'm more fundamental guy. So moving on, I would say that considering everything I've looked at right now, I'm just going to lean towards buying now, for now, okay, until something changes in the next couple of days. But right now, if I see anything that crosses above here, if I see the candle, a 4-hour candle that closes above here, I'll probably consider buying. My stop loss is going to be pretty tight though, because I wouldn't want to hold this one for a longer period of time. I'm just going to go for maybe 1:2.5, and that would be that on that one, okay, on EURUSD. So I will be recommending that for you as well. The last trade I'll be recommending is USDJPY. If you are interested, only interested party, okay, it seems to be pulling back right now decently. Okay, considering that considering that the what's it called again? This guy, the Japanese yen, seems to be the most strongest currency today on the 8-hour band. You can see right here we have Japanese yen that seems to be tilting all the way to the upside, whereas every other currency seems to be flat. The only currency that seems to be strong is UK, GBP and CHF right there. You can see CHF and GBP. Every other one are weak, including dollar. Dollar is that brown. Where is this brown right here? Still very weak, okay? But this is every 8 hours, so that's not that really interesting or important. But USDJPY, I would say I'm looking for short opportunities, excuse me. Or when do I want to buy? When do I want to take that trade? I don't know, guys. This is a bit tricky. It is a little bit tricky, considering the fact that I'm still waiting for another lap for DXY to go up. Don't forget, I'm still expecting DXY to go a bit further up, okay, before I can start shorting. So let's just hold up on anything dollar for now. Or if I can get a nice and decent pullback on Aussie yen, let's just replace Aussie yen with dollar yen. Okay, so if we can take it, we can see a nice and decent push to the upside of Aussie yen. Okay, I would consider shorting Aussie yen furthermore. But right now, I have a trade on. We have a recommendation on EURUSD. Okay, we have another one on Pound USD. We have another one on EURCHF, and we have AUDJPY. Okay, so don't forget, AUDJPY is a short trade. EURCHF is a long trade. Pound USD is a short, and the same thing goes for EURUSD. So these are the four setup four trade recommendations I can give you today. They are both mixed with technical and fundamentals. Okay, so you might want to find your way around them. Okay, but you don't have to do all of this by yourself. Okay, you can join my mentorship group where I will give you the clearest insight on how all these things can play out or will play out in the next couple of days. So that said, don't forget to like my videos. Don't forget to subscribe to my YouTube channel. Don't forget to follow me on my social media pages, TikTok, LinkedIn, YouTube, every other social media. I have the Instagram and every other thing on Facebook as well. So I'll see you in the next one. Okay, don't get margin call. Manage your trade properly. I will see you in the next one. Have a good